Well, I think they just have to keep raising rates, to be honest. Otherwise, we will just see that inflation becoming entrenched. I mean, clearly, we're getting that figure this morning on inflation, I think was another wake up call, 9.1% across the euro area. And even if the energy stabilizes, and I very much doubt that it will in the short term, I'm afraid. But even if and when it does, an enormous if, you've got a lot of inflation still in the pipeline. And I'm afraid I think that tells you that rate rises are going to have to continue in Europe. Interest rates are still way, way too low. And of course, they're very, very low relative to the United States. So they have to rise to narrow that gap further in order to prevent the euro and, of course, the pound in the UK from coming on under too much further downward pressure.
When you talk about inflation in the pipeline, Giles, good morning, Juliana here. Where do you see that inflation brewing in the coming months?
I think through the industrial production pipeline. So as manufacturers push their prices up, that feeds through to finished goods and then to retail prices. It feeds through to investment goods. It feeds through to agriculture as we get further rises in the price of inputs like fertilizer and so on. So I think really through almost every route that you can see, and of course we've had these big declines in both the euro and the pound against the dollar. That's a further source of import price pressure, not all of which by any means has yet come through into these prices.
Giles, can we ask you about the UK? Karen and I were just discussing moments ago, the latest UK house price data showed that house prices in the UK in August rose another 10%. So no sign of weakness at a headline level. To what extent do you think the strength and the resilience of the UK economy to date, if you can call it that, depending on where you look, is down to that weaker currency? Or are there actually reasons to have confidence in the UK outlook? It's not obvious to me where that confidence would come from if that's the case.
The fall in the exchange rate is always a mixed effect. On the one hand, it does, as you mentioned, Karen, I think boost things like house prices, but I'm afraid at the end, and obviously helps a little bit on the trade competitiveness side. But at the end of the day, I think in current circumstances, it's unequivocally bad due to the higher import prices, which will feed through into inflation. As for sources of resilience, I think there are a lot of, again, I think you made a very good point about a split economy between those on lower incomes under more pressure, those on higher incomes and perhaps with savings that they built up during the lockdown. And so I think it's that latter group which are providing a degree of cushion to the economy, perhaps over a number of months, but that won't go on indefinitely. And so if I look beyond that, well, it is going to be down to what the government does on fiscal policy. And maybe we will have a leader who comes in and who does actually put quite a lot of money back into the economy.